Stop buying Intel on Apple hype. Seriously. If you saw the headlines and thought Intel is back, you need to understand the timeline. Here is the counterintuitive truth that Wall Street is debating right now: the Apple-Intel deal makes strategic sense. But production is years away. Analysts say the absolute best case is 2 to 3 years before the first chips flow off the line. It takes 2 years to design a chip of this complexity, plus 4 months for production cycle time to volume ramp up. Intel's 14A process is expected to be available in 2028 or 2029. Volume production of Apple-designed chips is unlikely until late 2027 or early 2028. And here's the kicker: investors are pricing in perfect execution by Intel, a company that hasn't delivered for about 20 years. Let me break down the deal. And stay until the end for the 3 secrets that will change how you view every Intel headline. I'll admit something: when I saw Intel stock surge 14% on the Apple news, I thought, this is huge. Intel is back. Then I read the analyst's notes. And I realized, the market is pricing in perfect execution. But the timeline is years away. Today, I'm going to break down the Apple-Intel deal. By the end, you will understand why this is a long-term play, not a short-term catalyst. Let's start with why this deal makes sense. Apple's problem: TSMC is struggling to meet surging AI chip demand from Nvidia and others. Apple CEO Tim Cook said in April that supply constraints at TSMC have held back iPhone sales. Apple's strategy: find a second source. Reduce dependence on TSMC. Intel's problem: Intel Foundry has lost billions. They need a marquee customer to prove their technology. Intel's strategy: win Apple. Show the world they can compete. The US government factor: Intel has emerged as a key pillar in the US plan to rebuild domestic chipmaking. Trump officially confirmed the deal on Truth Social, calling it a significant milestone. The counterintuitive truth: this is a shotgun wedding, as one analyst put it. Necessity is driving the deal, not technological leadership. Now let me show you the real timeline. The design phase: it takes 2 years to design and SoC of this complexity, and a further 4 months through production cycle time to volume ramp up. The best case scenario: the absolute best possible case would be 2 to 3 years before the first chips flowed off the line. Volume production of Apple-designed chips was unlikely until late 2027 or early 2028. Intel's most advanced process 14A is expected to be available in 2028 or 2029. Initial shipments of lowest-end M processors. Analyst Ming-Chi Kuo says Intel could begin shipping Apple's lowest-end M processor as early as Q2 to Q3 of 2027. The counterintuitive truth: even the optimistic timeline is 2027. If you're buying Intel for Apple revenue, you're waiting 12 to 18 months for the first dollars. Now let me explain which chips Apple will use. Initial target: lowest-end M series chips used in MacBook Air and iPad Pro. Shipments of roughly 15 to 20 million units annually. Why start here? Lower risk, simpler designs. If Intel fails, Apple's premium products aren't affected. Later, A-series iPhone chips. Analyst Ming-Chi Kuo says roughly 80% of Apple's Intel orders could be iPhone chips, the A21 by 2028. Process technologies: the M7 chip will use Intel's 18AP process, expected to go into mass production by end of 2027. The A21 chip will use Intel's 14A process, expected to go into mass production by end of 2028. The counterintuitive truth: Apple is starting with low-end chips. Testing Intel before committing critical ones. This is a hedge, not a full pivot. Now let me be real about the risks. The analyst warning: investors are pricing in perfect execution by Intel, which is a company that hasn't delivered for about 20 years. The yield problem: Intel needs to produce chips with high yield, the percentage of working chips on a wafer. Apple expects TSMC-like standards. Intel's current status: 18AP yields need to stabilize at 50 to 60% in 2027. TSMC's advanced 2 nanometer node yields are north of 70%. Intel's CFO recently said 18A yields are adequate but not where they need to be. The analyst quote, "With no track record, that's a huge leap of faith and commercial and financial risk." The conclusion, Malcolm Penn, CEO of Future Horizons, called the deal a shotgun wedding. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1, the timeline trap. The Apple-Intel deal is priced in TODAY. But revenue doesn't start until 2027 to 2028. If you're buying Intel for this deal, you're paying for something that hasn't happened yet. And might not happen perfectly. Secret 2, the execution risk, reality. Intel hasn't executed flawlessly in 20 years. Yields are still below TSMC's standards. Timelines are uncertain. The market is pricing imperfection. That is dangerous. Secret 3, the shotgun wedding signal. When an analyst calls a deal a shotgun wedding, it means necessity, not love. Apple needs capacity. Intel needs credibility. This is a marriage of convenience. It could work, or it could fail spectacularly. So what should you actually do with this information? If you own Intel stock, the Apple deal is a long-term catalyst, not a short-term one. First meaningful revenue comes in 2027 to 2028. If Intel executes, the stock could re-rate significantly. But if yields disappoint, the stock will punish the premium valuation. If you own Apple stock, this is a hedge, not a revolution. TSMC remains Apple's primary supplier for premium chips. 80% of Apple's production still goes to TSMC. If you are considering buying Intel, wait. Let Intel prove execution. Watch for yield updates. Watch for timeline confirmations. The perfect execution premium is built into the stock. If Intel stumbles, the stock could drop 20 to 30%. Here is my question for you. Do you think Intel can execute on the Apple deal perfectly, or will years of history repeat themselves? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on the semiconductor industry and the biggest tech deals of the decade. I'll see you in the next video.